All right, welcome into Market Day Report. I am Scott Schulte, still the cow guy. Thank you very much for tuning us in. If you've been with us all day, that's great stuff. Let's fix the old mic before we get going here. We've had some more Chinese news out here today. As it looks like that the lockdowns were number one affecting us, but number two, OPEC has come out and said that they might stop production. So we're seeing crude oil go all over the place here today. But let's get to our prices first here. Let's talk about corn. Corn is trying to stay close to home. It's actually come back here a little bit, and that's going to be coming back with the energy prices, right? Diesel is up 1/2 cent to 6.68 1/2. March is down 1/2 cent to 6.70 3/4, and we're off a penny in May to 6.69. How about soybeans? What are they doing here? Soybeans are up 20 cents. We've taken out some key levels to the upside here. 14.56 1/4 last in Jan. March is up 18 3/4 cents, 18.5 cents down to 14.60 3/4. So some good boards when it comes to beans, corn fighting back. Wheat's been taking it on the chin, it still is. The December wheat in Chicago off 18.5 cents, 7.57 even. His last March is off 16 1/4 cents, 15 3/4 cents now, 7.81 1/4. These prices are brought to us by Bar Chart. We got to keep that in there. Hard red wheat in Kansas City is also off double digits, 14 1/4 cents lower in the D's there, 9.07 3/4 his last March off 14 1/4 cents. To 8.97 3/4. And then how about spring wheat in Minneapolis? What's that doing? That's off not as much, 5 3/4 cents in the D's. 9.51 1/2. March is off 8 1/4 cents to 9.41 1/4. Then, lastly, before we get to our next guest analyst, we've got D's cotton off 129 points to 80.05, but March is off 113 points to 79.05 itself. Let's bring in Todd Horowitz. He's with Bubba Trading. Todd, thanks for joining us on a Monday morning. It looks as though he's in Chicago. What are your thoughts here? I think things are, it's a holiday market, and it's acting like one is what I would say, but I'll let you talk.
Well, I agree. It's rodeo week, Scott. I mean, we got right. The rodeo to worry about. The markets are so uneven and unsteady that you see these gigantic moves. I mean, crude took off for about a $2. I mean, it's up, from the lows, almost $4 from the lows.
Right.
And a lot of it started about a half hour ago. Okay, out of nowhere, you see these moves come, and that is very typical in a very thinly traded market. That there's maybe some funny business going on right now, and until we get back to some normal liquidity and some normal volume, I think this is the way it's going to be. And I mean, I'm really shocked at wheat at how much punishments it's taking, and I'd love to step in and buy some here because, again, the wheat should be one of the stronger ones, especially what's going on across the globe.
Yeah, we just had, I had some folks that sent me some tweets saying that OPEC looks to be talking about another production cut, and that's what you've seen happen with crude oil. We've got some technical levels that we went through in beans. That also might be the excuse for that rally over there. But either way, it's still a quiet market. It's still a thin market, and these things can kind of get exaggerated. Would you agree?
100%. It's like an accordion trade, Scott. They run them in, they run them out, and we really don't have, it takes much less volume to move the markets in a big way either side right now. And that makes it much more treacherous for those who are trying to trade this market. And, that's the other reason is why farmers should always be hedged against what they own so that they can protect themselves from those dramatic down moves that may normally force them to panic out, where they can sit still and be protected against the cost.
And, that's to be expected around this time of year. If you get surprised by that, shame on you, because we've been around enough to know that those types of things happen. We're going to go away. We're going to pay some bills. And we're going to come back and talk more with Todd Horowitz, Bubba Trading in Chicago, after this. All right, welcome back to Market Day Report. I am Scott Schulte. Let's take a look at what's going on in the cattle. The cow guy wants to take a look at live cattle. Very cheap segue, but I'm not ashamed to use it. Live cattle in Chicago, that's down 35 cents in that D's contract to 152.72. We've also got Feb off 27 cents to 154.85. Moving over to the feeders, what do we have happening in the feeder cattle? Well, it's mixed. Jan's down 35 cents to 177.95, while March is up 2 cents, just one tick, 181.57. April's up 17 cents right behind it, so 185.30, but still very, very quiet. How about lean hogs? This is the China lockdown trade, really. Feb's off $2.75 to 85.75, and April's off $2.55 to 91.50. All right, let's bring in Todd Horowitz. He's been waiting kindly in the wings, very patiently. Todd, anything jump out at you when we talk about these livestock markets?
No, Scott, I think that when you're watching it, it's very much, I think, related to the crude oil markets. And, I think it wouldn't surprise me if crude continues to run, if cattle gets a little bit weaker and hogs pick up some strength, even with the China lockdown, with the China nonsense and with COVID. I think that, it's really a dollar and cents money thing. And, if oil's cheaper and they can fill up their tank less, they'll be willing to spend more on food. And I think it really comes down to, I hate to say it, but it's that simple. And that's what it really looks like right now, because we've really been range bound for months, all based on crude. Whichever way crude goes, the meats go the opposite. And, depending on which ones they are.
We have some mixed reports on Black Friday sales. You got any thoughts on that?
I think they should have been horrible based on anything I would know. I mean, they've been doing Black Friday for 10 weeks already? Every day is Black Friday. There is no Black Friday anymore. That's been eliminated, in my opinion. And the stores don't have enough goods. There's not enough that they can sell, and the people that can buy don't have enough money, and they've already maxed out their credit cards. So I can't imagine it's going to be a great Christmas season.
Yeah, we've got some metrics that say that that's definitely the case. Credit card usage is skyrocketing, and the savings rate is plummeted from just a few years ago. So we'll see. It's still fairly resilient out there for some reason. I think that the next thing we have to keep an eye on is jobs, because that's going to be, look, what's the price of beef or gas or groceries combined if your customers don't have any money? I mean, that's something that's got to come into play.
Right? That'll be Friday, and we already know we've lost over 600,000 full-time jobs since the month of May. And I'm sure that no matter what this report is, it's going to show a loss of more full-time jobs, which cannot be a good scenario in the long run.
Well, all eyes will be on it, that's for sure. Really appreciate your input. Great stuff, great content. That's Todd Horowitz. He's with Bubba Trading in Chicago. So we'll get back to you soon. Thanks for being on. We're going to bring it back here to Nashville. So I got to throw this one more time back over to Janet.
All right, as always. Thank you, Scott.